Today we're talking about permanent life insurance, what it is, how it works, and whether it's the right choice for you. If you're thinking about long-term financial security for your loved ones, this is something you want to understand. Welcome to the channel. My name is Anthony Gismondi. I'm a senior wealth advisor with Aegis Wealth Management, a part of Wellington-Altus Private Wealth. The goal of our channel is to educate Canadians on the complexities of personal finance and to provide clarity to help them reach their goals. If you're new to the channel, please make sure to subscribe and click the like button. What is permanent life insurance? Permanent life insurance is a type of life insurance that lasts your entire lifetime. Unlike term life insurance, which expires after a set period, permanent life insurance never expires, as long as you keep paying the premiums. It provides two key benefits. One, a death benefit, a tax-free payment to your beneficiaries when you pass away. Two, a cash value component, which can grow over time and be accessed while you're still alive. How does permanent life insurance work? Here's how it works. You pay premiums monthly or annually. Your policy remains active for life. It doesn't expire. When you pass away, your beneficiaries receive a tax-free payout. Over time, your policy can build cash value, which you can borrow against, withdraw, or use as collateral. This money can be used for anything, paying off debts, covering living expenses, or even supplementing your retirement income. However, withdrawing or borrowing from your policy may reduce the death benefit and can have tax implications. There are two main types of permanent life insurance. The first is participating or whole life insurance. Second one is universal life insurance. Let's break them down. Participating or whole life insurance. This type of insurance guarantees lifelong coverage and includes a cash value component that grows over time. It also allows you to earn dividends from the insurance company's profits. Some key features is a guaranteed death benefit, which your beneficiaries will receive at a set payout. Fixed premiums, your payments stay the same for life. Cash value growth, you can borrow or withdraw from it if needed. And potential dividends. Some policies pay annual dividends, which you can use, take as cash, use to reduce your premiums, or even buy more insurance to increase your coverage. For example, let's say you have a whole life policy with a $500,000 death benefit. Over time, the policy builds $50,000 in cash value. You can borrow against this cash value for emergencies, but if you don't pay it back, your death benefit will be reduced. This type of policy is great for long-term financial planning and guaranteed security. Universal life insurance is more of a flexible whole life insurance. It allows you to adjust your premiums and death benefit over time, and it includes an investment component. Some key features: flexible premiums. You can adjust how much you pay within certain limits. Investment options. You choose where to invest the cash value. Adjustable death benefit. You can increase or decrease the coverage as needed. And of course, access to the cash value. You can withdraw or borrow money from your policy. An example, let's say you have a universal life policy with a $300,000 death benefit. If you've built up enough cash value, you can reduce or even pause your premium payments while keeping the policy active. This type of policy is ideal for people who want more control over their investments, but flexibility in their insurance plan. How much does permanent life insurance cost? Permanent life insurance is more expensive than term insurance because it lasts forever and includes a cash value component. The cost depends on several factors. Age, the younger you are, the lower your premiums. Your health. If you have any pre-existing conditions, that may increase the costs. Gender, women often pay lower premiums because they tend to live longer. Lifestyle and occupation. Risky hobbies or jobs can raise your premiums. Since permanent life insurance is a long-term commitment, it's important to shop around and compare the options and find a policy that fits your budget and your needs. Here's a couple of questions. Is permanent life insurance better than term life insurance? Well, that depends on your needs. Term life insurance is cheaper and works well if you only need the coverage for a set period, like paying off a mortgage. Permanent life insurance is better for lifelong coverage, estate planning, and building cash value. Can I withdraw money from my permanent life insurance policy? Yes. You can withdraw or borrow against your cash value, but this may reduce your death benefit and could have tax consequences. What happens if I stop paying my premiums? If you stop paying, your policy may use the cash value to cover the payments if it's available. It can be canceled depending on the type of policy. It could also offer reduced coverage instead of fully expiring. Are life insurance payouts taxable? No. The death benefit is tax-free to your beneficiaries. However, if you withdraw from your policy's cash value, you might have to pay taxes on the gains. Some final thoughts. Is permanent life insurance right for you? It is a powerful financial tool, but it's not for everyone. It's a great choice if you want lifelong financial protection for your loved ones, a tax-free inheritance or estate planning tool, a way to build savings through cash value growth. However, if you're looking for lower cost insurance for a specific period, term life insurance may be a better option. What should you do next? Well, evaluate your financial goals. Do you need lifelong coverage? Compare policies. Look at whole life versus universal life options. Speak with an insurance advisor. They can help you choose the right policy. Understanding permanent life insurance can help you make smarter financial decisions and protect your loved ones for the future. If you found this video helpful, don't forget to like and subscribe for more financial insights. Thanks for watching, and I'll see you in the next video.